Hi, good evening. Welcome to the ANAROCK Knowledge Exchange with Mr. Amit Jatia, Vice Chairman, Westlife Development Ltd. I'll give you a quick introduction of Mr. Jatia here before we start off. He's a very known face, not usually seen much giving these kind of interviews. So I'll probably start off with thanking him for accepting our request. Mr. Jatia is one of India's leading businessmen and a pioneer of the quick service restaurant industry in India. He is the man behind the successful launch and growth of the McDonald's brand in this country. From a single restaurant in Bandra, where I remember going with him for the first time, Mumbai, to running over 300 restaurants across West and South India, Amit has achieved this in just 2 decades. With a family business having interest in specialty chemicals, lubricants, and real estate, Amit has a degree in hamburgerology from Hamburger University in Oakwood. Presenting our special guest for today, Mr. Amit Jatia, who is also known as the vegetarian boss of chicken burgers. Amit, I really want to ask you this question, and because you've not kind of been much on screen till now, a little bit about yourself. And I'm going to break this up into 2 questions for you to answer. I mean, from a family which had, interest in paper, textiles, chemicals, and many other businesses, how did you really get into the food business? And really, what was that journey? And the second part of my question is that what was the transition to the McDonald's partnership, which you actually cracked in just about 9 months?
Sure. I mean, Anuj, thank you very much for all the kind words to start with. We've just been lucky along the way with a bit of hard work, and I guess it sort of panned out quite well. But generally, I'm a very firm believer in what Steve Jobs says, that it is all about connecting the dots.
Right.
And if you follow his story, he made this very, very nice speech at a graduation ceremony. And when I look back, I completely believe in it, and that's what's happened. From paper to textiles to wherever, I ended up in the QSR business. But essentially, what I've learned is that everything you do, if you hit the ball out of the court in what you do, right, that becomes a platform for your next journey. And actually, when I look back, I found that all the dots connected. And what I did in the lubricant business became the base for my QSR business and so on. The other big thing that I look at always is follow your dream and destiny will take you where you should be. This is a very famous thing from the book Alchemist. And these 2 things have been my guiding principles. And I have learned that the crux is you hit the ball out of the court in what you do and doors keep opening. So simplistically, I've been lucky with a bit of hard work. On the transition, in 9 months, yes. So what happened is McDonald's was looking for partners. And of course, I was very reluctant being a vegetarian. First there was a family issue, and then I thought, would McDonald's even want a crazy vegetarian when all they really sell is non-vegetarian products?
Right.
What happened is that it actually worked to my advantage, because McDonald's understood that India is a very strong vegetarian market, and to have an insider who's got skin in the game,
right,
who understands vegetarianism, right, became a strength actually. And, one meeting led to the other. I eventually got the opportunity to meet Jim Cantalupo. I went to Singapore, worked in a restaurant for 3 days to see if I would be comfortable in that environment. And, all of that sort of got me in 9 months to sign the joint venture agreement with McDonald's Corporation.
So Amit, hats off. 9 months to get a McDonald's franchise for India is, a great feat to achieve.
Thank you.
So that really brings me, to my next question, which you just mentioned about you being an insider. I'm saying the challenge of running this global brand, really in a local context, or what we call locally. What is it, that you have? What were the mantras that were really there to make this brand local? And also, if you can kind of speak about, how you built and stabilized this brand in a very unfamiliar market. I mean, McDonald's was, known to a lot of customers, but they had never been there. At the time that you brought it in, not a lot of Indians had traveled overseas. So when you brought this brand down to India, what were some of the obstacles that you faced?
Oh. obstacles and doing business a bit in a new category in India, as always, they run together. But I'll
Right.
start with your first question. Local is something that I've learned, and it is now ingrained in my blood. The first thing was that McDonald's Corporation, if you ask me, set it up right. McDonald's Corporation did not need joint venture partners like myself, to bring capital. But
Right.
really, what they wanted was the market insight part, and then to have a businessman who's got skin in the game to actually run the business. The early days were very, very tough. But what some of my guiding principles, the first and foremost is what I call freedom within a framework. So as long as I understood that what brand McDonald's stands for, and I don't lose the context of brand McDonald's, right? But yet innovate in India, things work out very well. So for example, if you look at our menu, I mean, a dosa masala burger, I mean, give me a break, right? A dosa masala burger, and then the piri piri with the French fries. There was an editorial written in Business Standard.
It's actually become one of the favorites now.
Absolutely. So aloo tikki again. So the point is that we were able to create what I call fusion, right? Where it stayed within the McDonald's framework of the brand, and yet it gave flavors and taste to the Indian consumer, like that connected with them.
Correct.
Other big mantra, if you ask me from a global to local, the big challenge always, and 80% of the reasons why global brands don't succeed in local markets is the ability to sort of let go the right things. Okay, so I'll explain what I mean. There is a differentiation between nice to have and must haves,
Right.
right? And brands that understand the difference between the must haves of the brand and the nice to haves, they succeed because the cost structure and the customer dynamics are very different. And the word I sort of invented for that was, a nicer word for jugaad was Indovasion. And in the early days, all our conversations were around Indovasion. The idea is not that the brand or we have to do something substandard, but the idea is how do you do it in a cost-effective manner that works for the market without sacrificing the brand. So,
Got it.
these are a few things that sort of work for me. And of course, the underlying principle was never give up. That was the underlying principle.
No, but Amit, I
So,
really like the nice to have and must have. I mean, that's applicable to practically every business right now.
absolutely. And as long as you can differentiate that, understand what's the core that drives your business, and you are able to separate the nice to haves from the must haves, you are able to build a brand where somebody from the US can come for the first time to India, visit a McDonald's, and not feel unfamiliar. Yet at the same time, an Indian who goes for the first time to America finds that familiar as well. So I
Right.
think that's the challenge that one has to solve for, basically.
No, no, very interesting. I think I'm going to move a little bit to the real estate part of this right now, Amit. And I know a lot of research goes into selecting a McDonald's outlet. So, my question is that, what is it that you really look for when you select your real estate? That's the first part. And the second part of my question is that, do you see post this pandemic, is that selection process going to change, a little bit? And would your preference be more towards high streets or towards malls, and why?
Okay. So that's a very good question. And I'll tell you, in my learning, while people say that McDonald's is a real estate business, I only partly agree with that. My learning is very simple, that like if you get your supply chain wrong for product, similarly, if you get your supply chain of real estate wrong for the retail space, I feel it's game over. Okay,
Right.
so real estate is extremely, extremely, extremely critical. But it's not just about the location. Okay, first and foremost, it is about what I call, there are three things that I think about. The first is, of course, the location, and I'll explain how at least we think about it. The second is what I call a diversified portfolio. Okay, so for
Okay.
example, we don't like to rely on a single generator. So if things like COVID happens, and assuming we were only in malls, our business
Right.
would be zero versus whatever 90, 100 crores we did in the first quarter.
I mean, I'll
And
take airport for an example right now.
exactly. Also, so it's not that we should not be in airports, but I feel that we need to be diversified enough that some of the tools or some part of the portfolio is working.
Right.
The third element is the deal structure. Very, very, very important. And what I mean by deal structure is, you don't sell your short term, right? Sorry, you don't sell your long term to gain short term. And I have seen enough brands that want to just expand rapidly and without thinking about what's going to happen 3 years from now when the rent increases, what's going to happen if a slowdown comes in the marketplace, what happens if a mall does not work, what happens if you go to a market early. It's a great market, but you're going in early. So how do you structure your deal so that you can sustain that and make money in the long term? So these are three fundamental thought processes around that. But the crux is location, right? When people say location, 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 what does that mean? So a lot of work needs to get done to really get location right. And the first 50 is a no-brainer. Like, for example, being on Linking Road, I did not need any study to be on Linking Road.
Right.
The point is, once you get to that 50, it is very important to understand why the 50 are working or not working. And internally, we call it a trade area survey. So you'll be surprised that even though trade area survey exists, but not all McDonald's countries follow that. But I have, at least in India and Westlife, we have done trading area surveys for over 250 restaurants. So today when we go to an IT park, we know exactly what we need and where to be and how to be and what should be the design standards for that particular restaurant for it to make money. And then we just start replicating, learning, and the other thing we also believe is fail fast and move on. So I feel these are the 3 or 4 dynamics when it comes to real estate.
So I mean, on your statement of location, 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 I think everyone who's viewing this will realize that, whether the mall name is seen or not, you'll see a McDonald's right in the front over there.
Always. That has been also a part of our strategy to be right at the nose of the mall. And, sorry, you did ask me that moving forward, will we go to malls, high street? So my answer to that is it should be a diversified portfolio. And yes, we should be in the right malls. We should be on high street. So we are not going to skew ourselves in any one direction, but we want to make sure that we have a good balance.
Got it. So no, really what my question was that, is the path going to change? And I clearly hear from you that the portfolio should be diversified. And I think you'll continue the same way that you were pre-COVID as well.
Yes. So the only thing we have to see is how the work dynamics are going to change. If work from home, I feel that long term it will stabilize. There may be some changes that are 25%. So
Right.
I'm not saying that there won't be adaptation to this COVID situation, but I don't think it's going to be a dramatic shift.
Got it. Okay, Amit, my next one is again, a combination of 2 questions. So the first one is really that, many players right now are kind of struggling to, stay afloat. And this is really a business, in my opinion, where you need to evolve every day, because I think the customer is kind of evolving every day. What are some of the things that, as McDonald's, you did to reinvent yourself to kind of, be up to date with time, because, you've now been in the business for 2 decades. So what are some of the changes that McDonald's has done over these 2 decades to still remain relevant?
Sure. So I learned the hard way, Anuj, that basically if you don't evolve every day, the brand's going to be left behind and the consumers are going to change, because the change is coming from 10,000 different places.
Right.
Okay. So we faced that problem in 2013, where McDonald's remained a value brand and the consumer had evolved to something more than that.
Got it.
And it was a hard path for us, but in 14, 15, 16 and 17, we reinvented the McDonald's in India. And of course, if you look back from 2013, you cannot recognize the brand today. But what I promise you is that every 2 to 3 years, if you recognize the brand, then I have not done my job. Okay, so what I mean by that is the look and feel, the way you use McDonald's, the menu, consumer trends around health, consumer trends around minimalistic designs, consumer trends around technology, digitalization. So therefore, the people ask me, why don't you do more brands? My point is, I wish I had enough money to just manage this one that I have. And that the answer to that is because you got to evolve and change every day. And, whatever we did with McCafe, etc. in 14, 15, 16, we changed that with EOTF. and what you're going to see forward is going to be something different again. So I feel that that is one aspect, because the consumer is going to change and nothing can stop that. And that is why you see most brands don't last beyond 10, 20, 30 years, because they
Right.
fail to evolve with the consumer. So that is really how I see it. So what we have done now, we have what we call Horizon 2. And Horizon 1 is what is giving us business results today. And Horizon 2 are initiatives that are testing in the market and experimentation that we feel will have the same size of business today. So we
Wow.
believe that if the pipeline is strong, that's how the brand can keep evolving based on what we see through these tests.
Got it. So my next one is a very pertinent question, and I think everyone wants to know this one. When do you think, as McDonald's, you go back to your pre-COVID numbers? So
See,
just an outlook on the market.
I wish I knew that. Then I would definitely be a billionaire for sure, because then we could buy some lot of stock in the market
I
if
mean,
we knew
nobody said you're not.
that. I wish. But nonetheless, Anuj, I mean, my view is this. See, I've been saying this and I feel yet I maintain it. Even though I feel that the Indian government has been cautious, because it's the job of a government to be cautious. So I don't put blame anywhere. But I do believe that the caution has a trade-off to business. Okay.
Right,
And what I'm seeing in the global world, that they are being a little more aggressive on the caution, yeah, to ensure that business keeps going along with it. But
right,
having said that, what I'm seeing in markets like London, where I am right now, is that, and I'm seeing this in India as well, in cities where things have been normal for 6 to 8 weeks. I feel that from October, the new normal will start taking place. I
right,
feel that by January, we should be at 80 to 90% pre-COVID. This is my gut and my feeling, because I'm seeing
right.
restaurants that have been consistently opened in our territory for 6 weeks minimum. Yeah, we come back to pre-COVID levels, because the consumer takes about 6 weeks to feel confident again to start eating out and so on.
Got it. Okay, I'm going to move a little bit away from McDonald's to probably larger retail. And since you've been there for 2 decades, Amit, you're probably one of the best people to explain this to us. But what in your mind are the few critical success factors that need to be achieved for this growth to come back into Indian retail?
That's a challenging question, but I'll attempt my best to that. I mean, see, if you want a one-word answer, it's about consumer confidence. Okay,
Right,
I have learned one thing: it's not about money; it's about confidence. And if the consumer is confident about where they are heading in their job, security, business, and all of that, yeah, they're going to start spending. But they may have a lot of money, but if the consumer confidence is missing, yeah, I feel that the recovery will not happen. Now, I feel that there is going to be a lot of pain, and that pain, unfortunately, will be 12 to 18 months. And the way to accelerate that is only through certain actions that the government can probably take and support. I'm sure they're doing their best in balancing their, finances and whatever else that needs to be done. But what I'm seeing, for example, in the UK, things are pretty much coming back to normal one day at a time. They opened
right.
up on 4th of July, and I'm seeing that when they opened up, it took time, but today, businesses are almost 80-90% back to where they need to be, and the government recognizes that. So, in summary, if the government can take steps to build consumer confidence, right, I think the business will come back faster than we have expected. The other opportunity could be that as things start turning back to normal, right, and businesses start recovering, that is the other time I feel business will come back to normal. So I
Got
think
it.
these are my two thoughts. Yeah.
Got it. So I think a lot of it really revolves around consumer confidence.
Right.
I mean, the next one is really that, I think a lot of businesses across segments are moving to online.
Yes.
And a lot of this could be to do with the convenience factor in the lockdown period. Do you see this trend continuing in some way?
110%.
Okay.
Anybody who does not get omni-channel is going to be history. And it is not just in COVID, it was pre-COVID. And the whole thing, you think about it this way. Look at Amazon, right? Everybody knows Amazon.
Right.
What is Amazon all about, right? Digital. So why in this world would they go and buy Whole Foods? Right? Why do they want to buy retail? Why have they invested in some very well-known Indian retail chains? Right? They've picked up equity in a couple of chains. The
Right.
reason is that it is about omni-channel. It is not about one way. Today, the consumer needs to be present and be able to act as and when what makes convenience for them. So you are right. Omni-channel brings convenience, and convenience is the driver for consumer. So omni-channel is here to stay.
Got it. Okay, we've seen some quick V-shaped recovery in essentials, maybe electronics. Which other sectors do you see a V-shaped recovery coming, and which sectors do you really think will take longer than usual?
The second question is easier. So I feel that any luxury purchase at this point in time, till consumer confidence does not come back, that's definitely going to get deferred. Because, when you're not going out, you're not dressing up, why in this world would you want to spend money on luxury? Right. Obviously, meanwhile, where do you do your indulgence? Your indulgence comes in higher end essentials. So, for example, if you buy bread, you may buy sourdough bread, you may buy some infused bread, you may buy some infused juice, or you may indulge in some coffee that's unique and, interesting. So I feel that sector is going to definitely come back pretty quickly. Right. In our view, if I were to put it generically, any brand that can give the consumer trust around hygiene and safety, that's the brand that's going to come out first. There is a heightened consumer awareness around health and hygiene, especially in India. It was already at a different place globally, but therefore in India, you will see an acceleration of these categories.
Got it. So most of the multiplexes, food courts, restaurants are still not kind of operational and permitted to open. From your point of view, do you think this is inappropriate? Considering the supply chain and the amount of employment that is attached to this?
I feel that irrespective of that, till the government does not open things up, right? Like I mentioned to you, our research tells us that it takes 4 to 8 weeks for the consumer to feel confident. So they are prolonging delivery. My point is that especially from what I see around the globe, with the right norms, everything should be permitted. I feel that, from March until September, 6 months is more than enough to do what needs to be done. And that's who I am and that's how I think about it. But I feel it will keep the country in good stead if we start making moves towards opening up.
Sure. And what in your mind, Amit, are some of the must-haves that mall owners and real estate owners should do before they really let the consumers in and gain confidence?
I think it's definitely social distancing. There's no doubt about that. Masks are a very good idea to insist. The other big thing is that you keep disinfectants all over the place, and particularly what I've noticed here as well, particularly shop owners and retailers and the staff in the retail environment, they all have to have their masks. And because disinfectants are there every little while, consumers keep disinfecting and insisting that they wear their masks as well while maintaining social distancing. If you ask me, it's simple as that. And I'm seeing it work live.
We need to get ourselves to follow more rules here.
All markets are the same, Anuj. That's my learning. We think that every country feels that their people are most unruly, but every country is unruly. It's about being smart in your execution and enforcement. Right. We don't want to stick, but at the same time, we don't want it to be casual as well.
Got it. Oh, fair enough. Amit, I think all of us want to know. We've got all these retailers who are now going to the market and negotiating, rentals, asking for discounts, rebates. What's been the approach from McDonald's?
See, my approach when we entered this was, I feel, quite different. I told my team that yes, of course, we need to survive. But remember, in a 20-year relationship, yeah, this is 6 months to 1 year. Not that we are saying that we don't want the benefits of the current difficulty, but I said, can we come out with a situation where the landlord feels that if there is a brand that has handled it well through this period, looking at a win-win, it is HRPL, Westlife, and McDonald's. And I said, if this is the impression you can leave through COVID in the minds of landlords, I feel you would have served the brand a lot more than getting that one extra rupee. Now, I hope people don't take it and start calling my real estate team and telling them we are not giving you any more rates and discounts. But I'm saying it's a balance. We've got to look at them and we've got to look at our business as well. But like they say in the stock market, that over a 20-year horizon, even the Great Depression was a blip. Similarly, it's a blip, and that's how we need to manage it. But it has to be a partnership from both sides. That is the key.
Right. I mean, I hope everyone in the market could follow that same thing, because I think, but quick one. So, Amit, going back to the F&B business, we see, and, correct me if my numbers right, but, you see about 80% of restaurants really churning every 2 years in this country. Since you've run a successful brand for 2 decades, as an insider, as well as an outsider and a consumer, what do you think some of the mistakes these restaurateurs have made, and what is it that they can do to change it?
See, the biggest mistake, I've been saying this all the time, that you see entry barrier into the restaurant business is almost zero.
Correct.
Right? The biggest challenge in the restaurant business is scale. And what happens is, let's say 3 restaurants become successful, suddenly they want to go global. You understand?
Right.
I mean, my point is that if 3 restaurants are working, first own your immediate mini market. So let's say the restaurants are in Mumbai, I would own Mumbai first.
Right.
Okay, then you start building your team, you start building your processes. And then the second big challenge is that, when money starts chasing them. So what happens is, VCs, private equity people invest, everybody sees the Jubilants, hopefully Westlife and some other successful brands. And what happens is that they all want to chase growth. And when they chase growth, the mistake they make is real estate. Okay. And I feel that it's a combination of these 2 things, because you need patience, you need to be aggressive, but you need to be smart. You need to ensure your balance sheet is strong, because every 2 to 3 years, there is a recession, COVID or no COVID. And in 13, 14, 15, I've seen enough brands exit. Many brands that were sitting on panels like this with me 10 years ago, today, people don't even remember those brands. But they were
Right.
good brands, right? The people were good. But what happens is, when you think that I want to build 500 restaurants in 3 months, right? I feel that's where you start going wrong.
Yeah, I mean, look at your story. I mean, you're at 320 over 2 decades. I mean, we sometimes get numbers from clients who say that we want to do 100 in 2 years and we want to do 150 in 3 years. I mean, I don't know how these are achievable, but I think we'll run out of time. I'm going to probably give you my last question, and probably my most important one is that, you keep saying this phrase that a business is not just made of good times. What are few of the learnings of these 2 decades that you would want to leave with youngsters who want to get into the retail business?
It's a very, very good question. So firstly, I strongly believe, Anuj, that all times are great times. It's about business's ability to utilize those great times. Okay, so I'll use not the COVID example, but a recent example in 13, 14, 15, 16. Most food brands that stopped growing and started shutting down restaurants. I built 150 restaurants in that period. Okay.
Wow.
So the point is that it's a marathon, right? You should not be in a rush. And I have 2 mantras really. The first mantra is that it is a marathon in India. And if you run too fast or too slow, you're going to lose the race. The second is, you got to recognize that there'll be ups and downs in the economy. And I call them oxygen canisters. Okay, basically you need enough oxygen canisters, which in other words means a strong balance sheet, right, to sustain the bad times, and in fact take advantage of the bad times. The last thing I would say is, have the grit and the guts to stay the course. Okay, when wind comes and turbulence comes and you think the world is lost, right? You are going to fall back. But if your brand is strong enough and unit economics are good, right, you have to sustain the turbulence because it will make you stronger. So that's what I would like to leave with all the new people or young retailers who are coming in. That it is a marathon. It is about having oxygen canisters, so patience along with that, and it is about staying the course.
And I think absolutely, I think beautiful words. I think a lot to learn from, everything you said. I mean, you covered consumer confidence is critical. I think omni-channel is going to be the way forward. Health, hygiene, and trust will become very critical for, retailers to survive. You did obviously cover that, we should run a very tight and strong ship. And, all times are great. It really depends on how strong your brand is. But, what you started off with, Amit, saying that, it's upon connecting the dots and, follow your dreams and your destiny will come along with it. And, for every business, I must say this, that, we should start to differentiate between, nice to have and must have. I think that's really the critical, line which really makes you stand apart on the business that you have built out today. With that, I really want to thank you for coming on to this. And we look forward for the rest of us for many such sessions.
Thank you.
Thank you so much, Amit. It was a pleasure to have you.
Thank you for having me.
And I will look forward to seeing you once you're back in Bombay.
Sure. Thank you.
Yeah.
Yeah.
Thank you. Thank you so much.